was a strong and friendly fella with the name of Campanella. He was someone special, I could see right off the bat. There was something.
Webcasting from the Little Bell Publishing Studios in Rockton, Illinois, this is the Mortgage Messenger with host Jim Campanella. Welcome to the Mortgage Messenger. Today's podcast, we're going to continue the series about your credit report and your credit profile. And we're going to talk a little bit about credit scoring and some quick tips on how to maintain your credit score or actually make it go up. Real quickly here, credit score or FICO score is a number assigned by the three credit repositories. You have three different credit scores. On any particular day, it's a snapshot of a numeric figure of your credit. It can range from 300 to 850. The higher the better. Just for comparison's sake, right now as an example, basically you need a 620 to get a mortgage. A 720 or 740 is considered very good credit. So that gives you a range. Anything below 620, you probably have to address some credit issues. If you're below 600, as mentioned in a previous podcast, 25% of adults in the United States are now below 600. You'd want to address that, and you'd want to work on getting your credit back up above 600 or above 620. But the range is 300 to 850. The two big factors that go into a credit score is your payment history, which represents 35% of the score, and the amount of debt you have to the amount of available credit, which represents 30% of your score. So that's 65% of your score just in those two numbers. Inquiries only represent 10% of your score. Certainly you should be concerned about who's looking at your credit, but that is substantially less important than your payment history and how much you owe versus your available credit. So today what I want to do is go over some quick tips. This is just a real quick way to look at how to work on your credit or how to improve your credit or maintain your credit. For a more in-depth conversation about your credit scores, you can always go to our webinars with the address on the screen now and take the 45-minute webinar that's available on Thursdays and Saturdays. Completely free, no obligation, and if you're serious about looking at your credit score and maintaining your credit score or building your credit score, this webinar is fact-filled and you'll find a lot of good information in it. So I would strongly advise you consider the webinar. In any case, let's look at the 5 quick tips I've come up with. The first one's obvious, but it's the most important. Pay your bills on time. Whatever you can do, make sure you pay your bills. That's going to have the greatest effect on your credit score. If you miss a payment recently, your score is going to drop more. Now, over time, your score will slowly build back up because that late pay will fall further and further behind. But the goal here would be never to be late. So that's number 1, is pay your bills on time. Number 2 is if you do end up having to be late, the economy's struggling. There's a lot of people struggling due to the economy right now. You want to do what you can. Work with your creditors as much as you can to avoid collection or judgment. Collections and judgments affect your score greater than a 30-day late. So you want to work with your creditors. You don't want to avoid them. You want to work with them so that you can avoid a collection or judgment. Now, if you're in a position that you're paying your bills, the next big factor, 30% of it, is the amount you owe to your available credit. You want to continue to pay down that debt. And what I mean by what you owe to available credit is, let's say you have a credit card that's a $1,000 line of credit. You may pay your bills perfectly, but if you owe $900 on that $1,000 credit card, your credit score is going to be lower than if you owe $400 on the $1,000 credit card. It looks at the difference between your available credit and what you owe. If you're below 50% of your available credit, that's a good thing. If you're below 35%, that's an outstanding thing. So if you're above 50%, your credit score is being hurt by the fact you owe more than 50% of what's available to you. That ties right into the next tip, which is you may have some old credit cards or old lines of credit. You're not using them. They're still open. They're available to you. Don't close those accounts. Some people believe it's better to close those accounts and get rid of them so that you don't have the number of accounts open. And there's some truth to the fact that you don't want extensive credit. But by reducing what's available to you, let's say you had $2,000 in credit available to you, and one of it was on a card that was $1,000, and you got rid of that $1,000. Now you only have $1,000 available to you. Now all of a sudden, your percentage of what you owe to what's available to you is higher, lowering your credit score. So if you have some old accounts, again, that's not excessive, you don't want to close those accounts off. It's to your advantage to keep them open. And the final one, and we discussed that in a previous podcast also, is when you are looking to extend new credit, whether it be an auto loan or a mortgage or whatever, get your inquiries quickly. Again, inquiries only count for 10%. It's not a big deal. Not a huge big deal. But if you do your inquiries quickly, it only counts once against you. As an example, with an auto loan, if you go to 3 or 4 auto places and they all pull your credit, if you do it within a day or two of each other, that's only going to count as one inquiry against your credit. Versus if you stretch it out over 30 or 60 days, that would count against you more. On mortgages and on auto loans, you have a 30-day window. Everything else, you have a 2-week window. So if you are going out and obtaining new credit for a credit card or 2 credit cards, you're better off doing that quickly rather than stretching it out so that it doesn't affect your credit. Okay, certainly this podcast was definitely filled with quick tips versus something in depth. Again, I want to reiterate, if you'd like for more information, more in-depth 45-minute webinar, join me on Thursdays or Saturdays, completely free and you're under no obligation. And again, that website is www.mortgagemessenger.net/webinars, where you'll be directed to the registration page to join us on those 2 days. At the website, www.mortgagemessenger.net, you'll find more information about credit scoring from myfico.com. I've uploaded their information, which is very useful for you to get more in depth of what we're talking about here. So until next time, thank you for viewing.
I can't forget you, Campanella. You're still the MVP within my heart. You're still the MVP within my heart.